Let's kick off here with an email on NAxNA, the software company. That's from Sai. What does Kim think?
Thanks, Sai. NAxNA. This is a great company out of Markham, Ontario. Been very, very busy. They've done, 35 global acquisitions. So basically, NAxNA, they provide vertically focused enterprise software solutions, more sort of regionally, but focused on contact centers, video communications, virtual healthcare, telecommunication networks, and so on. Pretty healthy balance sheet. And they actually have a pretty big kitty of $250 million in cash for some more acquisitions that can go on. So solid recurring revenue, significant free cash flow, about averages around $100 million. Not a lot of outstanding debt financing, and it actually has a dividend yield of 2.4%. So certainly, currently trading just over, around $37. We have a 12-month price target of $59.50.
$59. Oh,
yep,
okay. You see plenty of upside. Yeah. Obviously, not a chart like Constellation, another consolidator. Why would it have underperformed lately? A name like Constellation Software?
Well, it doesn't sort of have the cachet of Constellation and, the period of, and it doesn't have sort of the depth and breadth of what they do versus, Constellation that is more involved in the vertical sort of acquisitions model. NAxNA, they basically work with two segments. One is the interactive management group that sort of facilitates remote work and manages customer communications. And then secondly, the asset management group, which offers sort of network infrastructure and operational support systems and so on.
Okay. We have Dominic on the line from Montreal. Go ahead, Dominic.
Again, thanks for taking my call. I appreciate it.
Pleasure.
I'm calling for Microsoft. I've already got a holding of about 7% of my portfolio in Microsoft, and I'm slowly accumulating it to about 10% of my portfolio. I'm just wondering if you find this attractive as an entry point. Do you think there'll be a better entry point in the near term?
Okay, pretty big weighting there in Microsoft.
So this is one of our top 5 holdings, certainly in the fund, in the BSD Global Tech Hedge Fund, but also through a number of our separately managed accounts. It really sort of led the charge when it got into the generative AI and the connection that they made for $10 billion over into OpenChat GPT. Right now trading at about 333. We actually trimmed a little bit, or 325 right now. It's off on the day. We have a 12-month price target of 338. So when it got up about, approaching that 338, we started to trim a little bit off. Entry points, it's going to be tough to actually try to get it that, below 300, I doubt. But, you could pick up some around 325, maybe 315, and then 300. But it has so many horses in the race. And so, I think it should be a portion. We have about 3.5% in the fund. And, if you don't want to sort of trim it, you can, it's a good idea, maybe write some calls against it. Up of, with strikes around sort of 335 to 340, 45, something like that. Yeah.
Okay. Jeff is calling from Halliburton, Ontario. Go ahead, Jeff, please.
Afternoon, gentlemen. Thanks for taking my call.
Pleasure.
My question is on C3AI. I recently sold because I hit my target, but I'm wondering if I left too soon. Also, I'm wondering, would it be better with, say, Google or Microsoft with regards to the AI revolution? Thanks for taking my call. I'll hang up and listen.
Yeah, Jeff, I think you're right in actually taking a little bit of money off the table on the C3 AI. You know, a lot of these ones, and certainly the smaller sort of software as a service side, and you know, I think you can probably pick it up. Oh, probably down closer to about 32 to 33. I wouldn't be surprised. Certainly today, when you look at the charts, it sort of looks like a bit of an island reversal in the market, sort of higher highs, lower lows versus the previous day. So I think you might have some continuation. And Jeff, I think you'd be able to pick it up down closer to that sort of 32, 33 level.
Can you remind us what C3.ai does? What's their focus, Kim?
Yeah, so they actually came out, gosh, it must have been back in 2020. And they were a very, very pure artificial intelligence, and then sort of morphed into that whole sort of generative AI. It exploded during the COVID period, came back to Earth, and then with this new, era of AI, it's just sort of taken off. So it is a leader when it comes to the artificial intelligence, though, on the software as a service side, not on the hardware side.
Okay, we are going to be back with Kim Bolton. He's taking your questions on technology stocks. 1-855-326-6266. We are talking tech stocks with Kim Bolton. Gulam is on the line from Toronto. Go ahead, Gulam.
Hi, good morning, gentlemen. My question is, I hold a small position in ZQQ and SOXX. They've done pretty well in the last 2 or 3 weeks, and I'm just wondering whether I should continue holding them for further upside, or should I sell them and take a profit? I'd appreciate your opinion.
So
thank you.
The BMO NASDAQ 100 hedged to Canadian dollar, and then the semiconductor, or a semiconductor
right.
ETF. Yeah.
Thanks for the question, Gulam. So I think you're right in actually questioning what you should do at this stage. For both the ZQQs and the SOXX, I would. And the ZQQ, I think, is the leveraged one, right? Right.
Hedge, yeah. I don't think it's leverage. I don't know even know if BMO does leverage ETF, so I better not generalize. Anyway, this one isn't, I don't think. Yeah.
So the way I always approach it, Gulam, is do a third. So if you're right, they both had a very, very good run. So I'd take a third off. And then if it goes higher, you still got 2/3 left. If it goes down, you can say, well, that was pretty smart of me. I took a little bit off the table, and then you can sort of figure out whether the trend is there to actually go lower. So Gulam, for both the ZQQ and the SOXX, I would just trim it a little bit, and either way, you'll feel good about yourself.
Bill is in Orillia, Ontario. Go ahead, please.
Thank you for taking my call. I'd like your guest's opinion on Fortinet, and what does he see in the years going forward? Thank you.
Fortinet, okay.
Thanks, Bill. Fortinet, yes, we own it in the fund. We own it in a number of of our separately managed accounts. Currently trading just above 67. We have a 12-month price target of 73.50. So it's getting close. So just like as I was saying to Gulam, you might want to take a little bit of profit off the table, and then you're still in it. And if it goes down, you can actually buy it back. So Fortinet, it provides broad, integrated, and automated cybersecurity solutions around the world. It offers this thing called a FortiGate hardware and software licenses, and it provides security and network for networking functions, including firewall, anti-malware, virtual private networks, and it very much competes with the like of leaders out there when it comes to like a CrowdStrike. And it reported recently, and it beat on the top line and the bottom line. And then on top of that, it actually raised its guidance. So I'd stick with it, but it's getting close to the price target, so I'd recommend maybe just trim it a little bit.
Trim a little. Rob sent us an email, wants to know about another software company, NAxNA.
So NAxNA, this is one that is it's actually out of Ottawa. It's a pretty big company. It's a $5 billion company, and it's sort of carved out a really nice niche in there when it comes to it's a software as a service in the cloud, but it caters towards software for supply chain of global operations. It has this thing called a rapid response platform, and it just enables clients to improve or accelerate the analysis and decision making across various supply chain operations. And as you can imagine, this is a great example of a software as a service that can incorporate artificial intelligence and generative AI. And they're doing that. And it helps companies sort of plan for the future, monitor the risks and opportunities, and just sort of respond to the changing environment out there. And one of the difficulties is that it sort of goes between profitability and not, and it's sort of right on the edge. For a $5 billion company, it should actually have consistent profitability. But currently trading I think it was about 181, 12-month price target of 220.
Okay, 220. Okay, we are going to take a quick break. We'll take a look at Kim's past picks when we return.
Making sense of business and the economy can be tough. We dig through the details to tell you what you need to know with straight talk and expert analysis so you can make informed decisions about your future.
Kim was on our show June 22nd of last year. Apple was his first idea. Now, Apple, in the past few days, did hit a record high, but then people apparently had second thoughts, but nice gain, had second thoughts over the high cost of that new headset, virtual reality headset. Nice gain, though, more than 30%.
Yeah. It's nice when you're good and lucky. No, we participated in the Apple ecosystem, and then sort of last year when it sort of got beaten up, and we picked it up down in the sort of the 130s, low 140s, and obviously it's done tremendously well. We started to trim, just like Microsoft, we started to trim a little bit off of Apple just prior to that session that they had over on Monday. Yeah.
With the virtual headset, et cetera.
With the Vision Pro, yeah. It's interesting because if you think about the last big launch that Apple did, it was the iWatch, right?
Yeah, and that has done well for them.
It did, but within, it was like 4 months after they launched it, Apple stock actually retreated 30%. So a lot of, sort of buying the rumor and sort of selling the fact after. So we trimmed a little bit off. We've stuck primarily with Apple and less with the ecosystem but we've sort of been looking at the ecosystem of where we can actually put some cash to work and sort of their supply chain side of it. But, everything is working tremendously well. 90 billion, 94 billion and almost 95 billion in revenue in the first quarter. Of that, 50 of it, almost a little over half of it is into the iPhones, but in sort of second place is the whole services side. The other good thing is that China and India are starting to come online for them very nicely. They raised their dividends, so currently it's trading at, what's it at there, Andy?
Let me get you a quote on Apple. Yeah, it's
sort of
about 270, I think. That's the price I saw, but give me 1 second. Okay.
And, went all the way up to 185. We had a 12-month price
180,
target.
I'm sorry, 180, I'm sorry,
180.
I beg your pardon.
And so our 12-month price target on this is $183.50.
How much?
183.50.
Okay. So not that much higher than where it is.
Yeah, it's not that much higher.
Yeah.
So I think you'll probably be able to get it a little bit cheaper, but it's still one of our, certainly in our top 10 holdings.
Let's check out how you did on Meta Platforms, another giant of the internet. And that stock now up 40% in the past year. Let's see how it did since June of last year, 75%. That was a pretty well-timed buy.
Well, if you think back, middle of last year, this is when we were recommending Apple, Microsoft, Meta, Facebook. And really the reason for it then was that you're in the midst of that tightening cycle. Everyone was talking about the recession. You had to stay away from the unprofitable sort of software as a service sides. Mm-hmm. So we gravitated over into the sort of the mega cap tech side. And it was the right thing to do. But then that was the good part, and sort of the lucky part was that you had Mr. Zuckerberg come out and recognize that there were some cloudy skies ahead, and he started to go through his efficiencies. And he laid off quite a few people and sort of fairly valued the organization. Debates will still persist over sort of product transitions and sort of the platform headwinds when it comes to, the privacy side of it and so on. But everything is, and we haven't trimmed this one. Now it's currently trading, I think, right around 264, 265. We have a 12-month price target of 276.50. Oh. I recognize that there are certain people out there that have it upwards of 300 or better. But we're sort of a little bit conservative on this, but we still like it.
We're tight for time. Accenture, let's see how you did with this one. And of course, implementing technology is a big part of their franchise. I have heard from a guy in the consulting business that older CEOs are baffled by technology. So they bring in the consultants to help them out.
Exactly. And, Accenture is the go-to place. Accenture has 75% of the Fortune 500 as clients. 97 of the top 100 clients have partnered with Accenture. And the beauty, actually, of Accenture is even if you go into recession, this business is very, very sticky. So there's a very strong relationship between the consultant, Accenture, and their companies. And they have a dividend yield of 1.6, 1.7. So currently trading at 306. And we have a 12-month price target of 315.50. I wouldn't be surprised if that goes a little bit higher. Not only are they the go-to people, but they actually walk the walk. So they are, I've met with Julie Sweet, and they really, really embrace the whole AI, the whole metaverse side. When they have board meetings, everyone is an avatar. And the senior management of about 475 people, they're all avatars. So anyway, great company.
Okay, we're going to be back with Kim Bolton of Black Swan Dexteritas. Technology stocks are on the menu. The number to call, 1-855-326-6266. The Bank of Canada has once again started raising interest rates. It increased the key borrowing rate by 1/4 of a percentage point to 4.75%, the highest since 2001. The bank says excess demand in the economy seems to be more persistent than expected, and there are increased concerns that inflation could get stuck above the 2% target. Irving Oil, operator of Canada's biggest crude refinery, says it is reviewing its strategic options. The company says those may include a full or partial sale or a new ownership structure. Irving's also considering a change in how it operates its portfolio of assets. And there is turmoil at Indigo, Canada's biggest book chain. The chair is stepping down. That's Heather Reisman. She's retiring and leaving the board in August. 4 other Indigo directors are also leaving, and one of them is citing, quote, loss of confidence in the board leadership and mistreatment. Let's check in on the markets in the wake of that Bank of Canada interest rate increase. You can see our benchmark is down 4% in the past year, slipping today. And let's have a look at the US markets. And you can see a mix showing from the big bourses there. Let's head to Vancouver. Moez, go ahead, please.
Good afternoon, gentlemen. Kim, your show is the best that I like, and he's very good host. Appreciate that. My question is on Adobe. Is it a buy, hold, or a sell? Thank you.
Thank you.
Thanks, Moaz.
Adobe.
The chocolates and flowers are coming your way. Thank you. The Adobe. You know, I remember sitting here with you, Andy, back in, beginning of November, and we were talking about generative AI. And so the poster child that we actually threw up there back then was Adobe. And one of the reasons was that they were trying to acquire a collaboration software company called Figma. But then it had to get nixed because there was an antitrust thing going on. But anyway, we still believe that Adobe is one of the best ones out there when it comes to generative AI, and certainly servicing those firms out there on the software as a service. They have this thing, Adobe Creative Cloud, and it includes all of their apps and so on. So I could go on and on. Please, anyone, if you want to hear more about some of these, just give us a call at Black Swan. But currently trading, right around 420. We have a 12-month price target of 440. You know, every time they come out with their earnings, they beat in the top, beat on the bottom, and then they raise their guidance. So it is very, very nicely a pure play when it comes to generative AI.
John in Montreal, go ahead, please.
Good afternoon, gentlemen. I've discussed this company, Art Media Technology, with you, and I believe in 2020 it was in regards to casting live from a conference room, a robot live talking to a hologram. That's a conversation hologram talking to AI. It was absolutely amazing. Final point is I think that the growth potential could be enormous. Could you tell me the advancements they've made, the latest? Do you like the stock, and would you own it? Thank you.
So that's ARHT Media.
They're actually, their head office is actually out at Yorkdale, just up near the 401. And Andy, if you ever get a chance, or if you want to go with me and visit with Larry O'Reilly, the CEO, it is a pretty amazing product.
They do holograms of people.
But they can do it in groups. So on the positive side, it's a phenomenal technology. So, and a lot of big companies use them. On the other side of the coin, one of the problems is to get it into mass production because it's expensive, right? And they've tried to bring down a lower price. But so basically, you know, for example, a biotech company or healthcare company, they have offices around the world, and they can actually pull together their engineers or their board or whatever, and actually have them all as holograms and sitting around the table. Or they can do presentations. So currently trading at 14 cents, I remember, and I think it was back in, gosh, it would be 2 or 3 years ago. It spiked all the way up to about 38 cents. And that was because of something that Elon Musk was doing with a competitor of theirs over there, and everyone. So, but it's sort of floated around here between sort of this 13 and 20 cent area. And our 12-month price target on ART is 18 cents.
Okay. Peter in Vancouver, go ahead, please.
Thank you. Mr. Kim Bolton, the tech guru. Finally, I got hold of you. You're so busy. So may I ask your opinion on, please, on advanced micro devices? Thank you very much, tech guru.
Good to hear from you, Peter. And which one was that, the micro?
AMD.
Oh,
Advanced
AMD.
Micro. Yeah,
okay. So, Peter, we actually trimmed a little bit of AMD recently, and so it's currently trading at just shy of 120. It's interesting when you it's 120. We actually have a 12-month price target of 128. But a lot of people actually have much lower price targets than that. So AMD it develops computer processes and related technologies, and it's a 36-year-old semiconductor maker. They bought that company Xilinx, which really sort of vaulted them ahead, and so they're probably the closest competitor to NVIDIA. When it comes to the graphic processing units and also the accelerators that they have. But of course, NVIDIA has also started to come out with some of their own software to couple up with their hardware. So, Peter, I would be prone to actually, I think you can probably buy this closer down to around 112, 110, and then I think you'll do very well on that. But good to hear from you again, Peter.
Okay. We are going to be back with Kim Bolton. He's taking your questions on technology stocks. Deborah's in Okanagan. Go ahead, please.
I'd like to say congratulations on your top picks. Today, my question is on Unity software. It's had a very ugly chart. I would love to get your comments and opinions on this one and the long-term hold position. Thank you.
Thank you.
Thanks, Deborah.
Unity software.
Yeah. So, we don't own it now. Mainly because it's a bit rich, and you can see it that actually spiked. But you're right, Deborah. It's come down from grace quite a bit, upwards of $60 now, down to But look at it before; it was all the way down into the mid 20s. So, Unity software, again, if you go back, Unity actually was involved in game development platforms. And they actually, they initially targeted, mobile gaming, but it was a great extension when the whole AI hype came along, that they had this development program or platform that could be easily used and reformatted into the generative AI side. Not only recognized by investors out there, but a lot of the big companies, and there was an announcement. I was trying to think, Deborah, but give me a call later. There was an announcement just over the last couple of days. I think it was either with Microsoft or NVIDIA, that they had partnered with Unity, and that is precisely why it's spiked recently. But it's fairly well priced, I would say, right at this point. And I think you can probably, I would set it up to hopefully buy it down closer to 30, either side of 30, Deborah. So that's what I would do at this point.
Okay. Apparently, they have a connection to this Apple Vision Pro. Apparently,
that's the one I was
there.
thinking of.
Yeah.
Yeah, that's right. Because that's right. When Apple did their Vision Pro the other day, they actually mentioned Unity Software as a supplier for them. And so that's where they got the spike. Thanks, Andy.
George is calling from Kingston, Ontario. Go ahead, George.
Oh, hi, Kim.
Hi.
Thanks very much for taking my call. In keeping with CTS going, I guess, leaving the TSX, I was wondering if you could tell me, should one look at selling CTS presently, or should one hold on to it? Do you see some sort of a future for CTS? I'm kind of concerned if it isn't, like most of these Ottawa tech things, they come and they go. Excuse my pun. Thanks very much. I'll wait for your response.
Converge Technology Solutions.
You're right. I thought it was actually leaving the S&P TSX. I don't think it was actually being out of the TSX exchange, but...
No, I think it might be just the index, but let me confirm that. Yeah. Okay.
So, and it's pretty well priced in. I would say, because it's public knowledge now, currently trading around 350. And when that news came out, it was sitting up around 375, so it's sort of been priced in. The average analyst, even with that, has a 12-month price target out there of $4.95. We don't own it. We cover it. We know it's quite a lot of people follow it, and so anyway, Converge. I would exercise some patience, just see, because, and you can probably buy it sort of better levels, maybe closer to about 3.25. So Converge, they provide software-enabled IT and cloud solutions. It's more regionally focused, end-to-end IT provider. They have two sort of solutions out there. One is the blockchain side. The other is the IT spend optimization solution analytics that they have. And of course, they also talk about incorporating the AI in here. So patience, and I would just sort of hold off and let the dust settle.
Yeah, so it's simply leaving the composite index.
Right, the S&P TSX. Yeah.
Okay, we're going to have Kim Bolton's top picks coming up. First idea, analog devices. Are they semiconductors or analog chips? Yeah.
So like in the world of semiconductors, you have analog, which is sort of the programmed, and then there's the digital and memory side that you can configure, right? And so analog devices does analog.
Yeah.
And actually, I should have mentioned it to Peter, because when Peter was talking about AMD, if you're still listening, Peter, when you trim a little bit off of AMD, I'd recommend that you pick up analog. You're still in the semiconductor, but you're moving from the digital over into the analog side. So the company basically provides like converter products and analog signals, power conversion, driver monitoring, and so on. It's all the chips that go into our refrigerators or our sewing machines or whatever, to get them to constantly do what they do repetitively. It's a pretty crowded space. These guys not only design, but they also manufacture. But you have people in there like STM Microelectronics, Texas Instruments is involved in the analog space. But the reason I pick this is that you've seen sort of the NVIDIAs of the world just go up to ridiculous price-earning multiples. And if you still want to participate, and you should participate in the semiconductor, just rotate. Take a little bit of money off of the digital side and put it over into the analog, like an Analog Devices or a Texas Instruments. Currently trading at about just over 170. 12-month price target of 212, so it's still got a decent runway.
Okay. Dell Technologies, you like the look of this one?
Yeah, a lot of people are probably thinking I'm being a little bit chicken, but it is conservative. You know, when you look at a lot of the semi side, the software as a service, they've had a great run. They're getting close to their price target. And this is where we start to trim some stuff and get into more conservative things. We don't know whether you're going to have a recession sort of in late third quarter, fourth quarter of this year. Dell Technologies is a great place, but I'm sure a lot of people say, well, hold on. They're involved in personal computers. Well, yes, and actually, you know, the desktop, workstation, notebooks, they have had a bit of a haircut and slowing growth. But the other side of the coin, which actually is more, it's more like around 65% of Dell's business is into data centers. So this is actually even a play into that sort of generative AI, because what you need for generative AI is data, and what you need are cloud systems. And the cloud systems sit in the data centers. And Dell is one of the biggest suppliers, you know, for the racks that they have in the data centers. So it's a nice play. You know, it's currently trading right around $45, and it's got a 12-month price target of $55. And it's a big company. And if I recall correctly, I think they have about a 2.9% dividend yield.
Okay. Right, that's interesting. A lot of people would have thought, oh, they're just PCs, but you say big in the server farms. Yeah.
Exactly, and you know, you need the data centers to do all the AI stuff.
I'm showing a yield. Actually, I'm showing a yield of just over 3%. And then finally, Monday.com. This is one of these productivity software companies.
Right, work collaboration. And we've talked about these before. Names like Asana. We actually use Asana. We started to look at Monday because we started to grow sort of the Asana. The other one, the other big player in the work collaboration space is that Australian firm Atlassian, symbol team. But Monday.com is an Israeli company, and one of our senior analyst, Alex, lives and works over in Israel, and he knows these guys inside and out. One of their claim to fame for Monday.com is that they have low-code or almost no-code technology, and it's a big differentiator. So you don't have to be a technology whiz. A lot of what they do in the work collaboration, work management tool space is intuitively built into their software. So it sort of leads you. Which is nice, and you know, they reported back on May 15th. They're still unprofitable. However, it was a big deal on May 15th when they came out and they said, you know what, we're going to be profitable by the fourth quarter of this year. When they were actually talking, even last year, that it was going to be 2025. And so it's had a nice run here. It's currently trading, I think, right around 183, 184. We have a 12-month price target on Monday.com of 226 and a quarter. So if you want to know anything else, just give us a shout at Black Swan.
Okay, and they can just look you up, Black Swan Dextertas, on the web.
Yep.
Okay, well, let's leave it there. Thank you very much indeed, Kim.
Yeah, great to be with you.
Always great to hear. We always learn a lot about tech. Let's have a look at the markets before we go. And there are U.S. stocks. It's interesting. I was checking the Wall Street Journal page today, and their lead story is wildfire smoke blankets sky across northern U.S., drift from Canada prompts air quality warnings. So that's the big story for the Wall Street Journal. But in any case, the S&P has now just touched the bull market territory and then retreated. So it did get to that bull market versus the October low, but then losing a little bit of... it got to a level this morning that would have marked a new bull market if it had closed there. So we won't get into the old intraday closing price debate. There is the TSX, and you can see it is slipping today. Stock's not reacting in a big way to news that the Bank of Canada is resuming the interest rate increases. After all, the beatings will continue until morale improves. And let's have a very quick look at oil prices today. Oil up about 1%. Thank